So we are on page 3. We're continuing with the restricted fund method. Restricted fund method, we've talked about most of this. It's need a general fund and at least one restricted fund and or an endowment fund. And you can do that yourself. The deferral method. Unrestricted contributions are reported in income when received. However, restricted contributions are deferred and matched against expenses. Notice endowment contributions are not shown on the operating statement, the income statement, because they're restricted in perpetuity. As I said before, most or many looking at do we have the cash to operate. So showing endowment cash on there muddies the waters. People aren't perfectly clear, can it be used, maybe it shouldn't. Because remember, you're also putting up these statements on your websites so that potential donors can see them and look and see if it's worthwhile doing. So you want to be as clear as possible. The endowment is not for use. And we talked about this already. For acquisition of capital assets are deferred and amortized to income when the related asset is not depreciated, like land. The restricted contribution even if changes. And we're going to do examples of all this. So just really read that. Okay. On page 4 then, net assets invested in capital assets. As we talked about, that can be separated. And you can just read through this. The word is more confusing than actually seeing it in an example. So we'll do an example. Okay, we finally got to an example. So, example 1, we're going to start with the restricted fund. Now, on page 4, page 6 is the actual question. So these questions they have to tell you all about the all the funds and what goes into them and what doesn't and all the things like that. So this actually follows the one in the text, so they've got a little more explanation in there if you want to do that. So Blue Shield organization. We're going to illustrate journal entry for the various funds and the general purpose financial statements using the restricted fund method for accounting for contributions. So we'll always tell you whether they're using the restricted fund or the deferral method. Blue Shield, charitable organization. Actually, you know what? Hit pause. And if you haven't already, read through page 4 and 5. I'm going to highlight a little bit of it, but not much. So just read through it so you can get a good idea about what it's saying, and then come back and start it again once you have. Okay, so as you know, the goal is to provide food and shelter for the homeless. Some permanent employees relies heavily on volunteers. Interestingly, you guys, a lot of the person that ends up as the treasurer for smaller not-for-profits has been a volunteer. So they may not have the financial accounting skills that not-for-profits need. So that's the reason why you guys or accountants are in such high demand for board. Okay, you've read the 4 sources. Government grants received annually. So that would be unrestricted. Donation held in March to raise funds for the current year. So those are unrestricted. I missed the special government grants just to fund capital. Those would be restricted. The United Way grant is received in November. And when is it going to be used to fund operations? Next year. So it's going to be restricted when received. And investment income is received from an endowment fund and other investments. So we know they're using the restricted fund method. And here's the three funds. Long talking about this, and it talks about the United Way grant, and it tells reported as deferred revenue. I would never be that generous in a question. You should know this United Way grant, because its year is restricted. So we can just cross that out because you already know it. That's just your information. Okay, I left it in because that's what the text does. It talks about the expenses. Some donated material and services are received each year. No record of these is made in the ledger accounts. We'll talk about donated goods and services. Often you don't have to, or you actually don't have to record them, but it makes sense, especially the more you get, to record them. Another section. Small equipment purchases made from this fund are capitalized in the capital fund. On page 5, and you read it already, so we're good there. Don't forget, if you make any equipment acquisitions from the general fund, it has to be capitalized in that fund. Now, this whole section, you can just read. Remember, we had the rules for capitalizing assets. If you're small enough, you can not capitalize them and just expense them. You can capitalize them, make them an asset, and not average. That's less than $500,000 for average revenues in a given year. Once you hit the threshold, being bigger than that, or when these rules came into place, all the organizations that owned capital assets had to do some kind of entry here, like they did here, to record their capital assets. So they're actually capitalizing assets bought before. Okay, now the endowment fund. The 500 in this fund, notice everything in here is in thousands, was bequeathed to the agency. Investment income earned is to be used for operating purposes only and is recorded in the general fund. Not only, but for operating purposes. So sometimes it says investment income is to only be used for what endowment, so it would say for scholarships. But this one can be used for operating. And you can read this. So, just a little summary on the money coming in. So we get money. It's either going to be unrestricted or it's going to be restricted. And this is for the fund. If it's unrestricted, you recognize in revenue. If it's restricted in some way, like that United Way amount that's for next year, there's two options. If it has no fund, defer revenue until you match it to expenses. And if there's a fund, you recognize revenue in the fund right away. Just bearing in mind when we say defer revenue, we mean some kind of unearned liability account. So on page 6, we've got their starting statement, beginning of the year. So notice the multi-columns, and again, I'm so sorry it's so tiny. For the restricted fund method. Notice things like we've got accounts payable, some's in the general, some's in the capital fund. The deferred revenue would be that United Way grant, because we get it every year. And again, pledges receivable, you could have AFDA. You wouldn't call it AFDA, but some type of account like that. And remember, fund balances is instead of owner's equity. Okay. So I'm going to end this video, and then on the next video we'll start going through the actual entries for this.